In the dynamic world of finance, staying abreast of the latest stock market news is essential for investors and analysts alike. As of February 23, 2024, the stock market witnessed a mixed outcome, with major indices wrapping up the day following a recent rally. Welcome to Stock Whispers, your gateway to investment brilliance. Today, we will delve into the key highlights of today's market movements, shedding light on the factors contributing to the mixed performance of indices and providing insights into the broader implications for investors and the economy. Let's see what unfolded in the stock market today. It was a day of mixed outcomes for investors, with various indices wrapping up the trading session with differing results. The S&P 500 and the Dow Jones Industrial Average managed to eke out gains, albeit modest ones. The S&P 500 saw a slight increase of 0.16%, indicating a positive trend for a broad spectrum of companies represented within this index. Similarly, the Dow Jones Industrial Average experienced a marginal uptick of 0.03%, suggesting a favorable performance for some of the largest and most established companies listed on the stock exchange. However, the Nasdaq 100 didn't fare quite as well, as it faced a slight dip of 0.37%. The Nasdaq 100, which is heavily weighted towards technology and growth-oriented companies, encountered some downward pressure during today's trading session. This decline may reflect shifts in investor sentiment or specific challenges faced by companies within the technology sector. Despite this setback, it's important to note that fluctuations in the stock market are not uncommon and are often influenced by a myriad of factors, including economic indicators, corporate earnings reports, and geopolitical events. Overall, today's trading session showcased a mixed bag of results, with some indices experiencing gains while others encountered minor losses, highlighting the dynamic nature of the stock market and the varying fortunes of different sectors within the economy. Let's zoom in on how different sectors performed. It's like reading two different stories. The energy sector, represented by XLE, didn't have the best day. It ended up down by 0.64%. That means companies in the energy business didn't do as well as others. But here comes the good news. The utility sector, shown by XLU, had a fantastic day. It soared up by 0.7%, showing great success for companies involved in providing essential services like electricity and water. In simpler terms, some parts of the economy didn't do too great today, like the energy sector, which includes oil and gas companies. They had a bit of a tough time, but on the bright side, the utility sector, which covers things like electricity and water services, really shined. Companies in this sector did exceptionally well, which is good news for everyone relying on these essential services. Overall, it was a day of contrasts in the stock market, but there's always something positive to find, even when things seem a bit mixed. Shifting gears to the bond market, we saw some noteworthy movements in Treasury yields. The U.S. 10-year Treasury yield, which shows how much the government pays on its debt, went down quite a bit. It dropped to 4.25%, which is significant and can affect things like mortgage rates and borrowing costs for businesses and individuals. This drop was about 8 basis points, which is a measure of percentage change in interest rates. Similarly, the 2-year Treasury yield, which is another important indicator, also went down a bit. It was at around 4.69%, showing a trend of decreasing yields across different time periods. In simpler terms, the interest rates on U.S. government debt fell today. This is important because it can impact many things in the economy, like how much you pay for loans or how much a company pays to borrow money. The drop in rates means it might be a good time for people to consider refinancing loans or for businesses to invest in new projects. Overall, it's positive news for borrowers and could stimulate economic activity. Looking ahead to tomorrow, let's take a closer look at what might be on the horizon for the stock market. Early indications suggest that US futures, which are like predictions of how the stock market will perform, aren't showing much change after yesterday's strong showing. The S&P 500 index, which tracks the performance of 500 large companies in the US, hit a new high, ending the day on a positive note. This is great news for investors, as it indicates that the overall market was doing well. However, futures for the Nasdaq 100 and S&P 500 are showing slight dips of about 0.11% and 0.01% respectively. On the other hand, the Dow Jones Industrial Average managed to eke out a modest gain of 0.03%, suggesting that some sectors may perform better than others in the coming day. As we gear up to close out the trading week, all three major indices seem to be in relatively good spirits. This positive momentum can be attributed in part to the optimistic sentiment surrounding artificial intelligence stocks. One notable catalyst for this optimism is NVIDIA's impressive earnings report, which likely bolstered investor confidence in the tech sector. NVIDIA, a leading player in the AI and semiconductor industries, reported strong financial results, signaling robust demand for their products and services. This positive outlook for AI-related stocks reflects the growing importance of technology in our daily lives and the increasing adoption of AI-driven solutions across various sectors. Such developments not only bode well for investors seeking growth opportunities, but also hold promising implications for the broader economy as innovation continues to drive progress and create value. Andrew Tyler, who leads U.S. market intelligence at JP Morgan, has some interesting insights to share about NVIDIA's recent success. He suggests that NVIDIA's outstanding performance could be reassuring for investors who have been concerned about the possibility of the Federal Reserve cutting interest rates. While Tyler acknowledges that there might be some ups and downs in the short term, especially because of month-end fluctuations, he holds a positive view of the overall U.S. economy. Now, in other news, the U.S. 10-year Treasury yield and WTI crude oil futures. The U.S. 10-year Treasury yield, which is like the interest rate on government loans, is showing a slight increase. It's currently around 4.34%, indicating a rise in the cost of borrowing for the government. On the other hand, WTI crude oil futures, which are predictions of future oil prices, are experiencing a decline. They're hovering close to $78.18 per barrel, reflecting a decrease in oil prices. The movements in both the U.S. 10-year Treasury yield and WTI crude oil futures are influenced by various factors. Investors are closely watching interest rate scenarios, as changes in rates can affect borrowing costs for businesses and individuals. Additionally, uncertainties surrounding demand for oil are contributing to fluctuations in oil prices. As investors weigh these factors, it's important to stay informed about developments in the financial markets, as they can impact everything from fuel prices to mortgage rates. Despite fluctuations, staying updated on these trends can help individuals and businesses make informed decisions about investments and financial planning. Let's not forget about corporate earnings. Today, we're anticipating updates from Warner Bros. Discovery and Bloomin' Brands regarding their quarterly performance. These reports give us insights into how well these companies are doing financially, which can impact their stock prices and investor confidence. By keeping tabs on these updates, investors and analysts can better understand the health of these businesses and make informed decisions about buying or selling their stocks. In addition to corporate earnings, it's worth paying attention to economic indicators like Germany's fourth quarter gross domestic product data, which is due for release. GDP measures the total value of goods and services produced within a country, providing a snapshot of its economic health. Germany is a key player in the global economy, so its GDP data can offer valuable insights into the broader economic landscape, including trends in consumption, investment, and trade. Understanding these trends can help policymakers, businesses, and investors make informed decisions about economic policies, investments, and market strategies. As we await updates from Warner Brothers Discovery, Lumen Brands, and Germany's GDP data, it's essential to stay informed about these developments and their potential impacts. Whether you're an investor, business owner, or simply interested in economic trends, keeping an eye on corporate earnings and economic indicators can provide valuable insights into the state of the economy and financial markets. By staying informed, we can better navigate the ever changing landscape of the global economy and make informed decisions that support growth and prosperity for all. Wrapping up our global roundup, European markets kicked off the day on a positive note, eagerly awaiting earnings reports from major players like Alliance SE and Standard Chartered. Over in the Asia Pacific region, most indices ended the day in the green, with China's market continuing to ride the wave of confidence fueled by monetary easing policies. And there you have it, folks. Another day, another whirlwind of market action. Thanks for tuning in to Stock Whispers. If you enjoyed this video, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, keep listening to those whispers and let them guide you to your next big win. See you soon.